first thing we want to look at, so the Code of Ethics, reaching all the way back to August, which seems like an eternity ago. But you'll want to review what's in that Code of Ethics that's listed in your textbook. Be familiar with, and it probably wouldn't be a bad idea for you to write down the different, and even if you abbreviate it, the different, the listing of the Code of Ethics from the American Payroll Association. Okay. There's a question there listing different codes of ethics and asking you which one is not part of the APA Code of Ethics. So you want to be familiar with that. How the payroll and the human resources departments work together. A question concerning why the two departments might be placed closely together and why they would work closely together. So review that, that relationship between payroll and the human resources department. So the payroll cycle, there's a figure in your book, figure 1.8, that you'll want to take a look at. Let me see if I can, oh, it's the same. Not used the .com on here before, so I don't know if it works. For this device. All right, well, hold on a second then. There we go. So this figure here in 1.8, you might want to make yourself familiar with this, just how the order in which payroll is completed, the different types of reports and records that use that payroll register. Well, so this is in your book there, so you have access to that. New hire forms. So review what that I-9 is used for, the W-4 form is used for, what type of information is gathered on that new hire reporting forms. You know, what does the I-9 form do? What does the I-9 form do? What kind of information is gathered on it?
Employee eligibility.
Mm-hmm. Eligibility for what?
Employment.
Employment. Like whether they're qualified for the job, or the professional qualifications, or?
No, more like legal classifications, like they're a citizen or they're under certain conditions.
Right. They are legally authorized to work in the U.S., right? So that's what that I-9 gathers, that information. What kind of, do you remember the types of verifying documents that can be used on the I-9?
Driver's license, social security card, passport.
Right. We need one form of ID that verifies eligibility to work. So that would be like a social security card that doesn't say not eligible for employment, because if it's not eligible for employment, it will say on the social security card. And then we need another form of identification that verifies the identity of the individual. So that would be some sort of photo ID. There are a couple types of ID that do both. So the individuals don't need two forms of identification. That would be a passport or naturalization certificate, because those do both. Otherwise, what most employees will provide is a driver's license or some sort of state issued or federally issued ID card, and a social security card. But a birth certificate would also work, right? What about the W-4 form? What type of information does the W-4 form provide to employers? So we've got I-9, so our new hire forms. I-9, this is legal. What's the W-4 do? What kind of information does the W-4 provide?
Dependent status, allowances.
Okay, but why? Why would they want that information?
Payroll's going to be deducted for sure.
Okay, right. So the W-4 form provides information to the employer regarding income tax withholding, right? So, does the employer or the employee fill it out?
Employee.
The employee does, that's right. Different types of methods for keeping track of time records. So if I gave you a list of different types of documents. Can you pick out which one or ones could be used for tracking employees' time? And there are a multitude of ways, right? We've got punch cards, biometric technology, handprints, eye scans, that sort of thing. Key cards, Excel spreadsheet, you can do it by hand. There's any number of ways, right, that those time records can be kept. So, can you determine the hourly rate for a salaried person if they are paid twice a month? So if we have somebody who has their salary and they make, well, we'll keep it easy here, 40, no, make it easy. What's their hourly rate? So 40 hours a week. First question, what would their hourly rate be? How would you determine that? What's the calculation? Right? So you take 42,000 divided by 52 weeks. So this gets us per week, right? Equals X. And then X, this is on a weekly basis and we're working 40 hours a week. What's the next part of that? What's the math? Do I have to do the math? So 42,000 divided by 52 weeks, they make 807.69 a week. How would we determine what they're making on an hourly basis? Right, we're going to divide that then by 40. Right? So 807.69 divided by 40 hours to get whatever our hourly rate is.
$20.19.
20 how much?
$20.19.
2019. All right. If instead of 40 hours a week, what if they worked 35 hours a week? How would that calculation change? What would change about that calculation? You gonna sneeze? I'm like anticipating here.
Will you divide the weekly rate by?
Yeah. So instead of 40 hours, we're just gonna change this to 35, right? Right? And it's not 2019 now, it's a higher rate. 2370, right? Okay. Something like that. But we would take the annual, divide the annual wage by the number of weeks, and then divide that by the number of hours worked per week. That's for an hourly rate. Now, if they're making $42,000 a year, let's say we don't care about the hourly rate right now. I have a different question. So $42,000 a year, they're paid bi-weekly. How much per week? We're going to divide again. I'm sorry, how much per pay? Let me put that a separate way. How much per pay? What's the calculation on that? So $42,000 a year. They work 35 hours a week. They're paid bi-weekly. How much do they receive for each pay? What's the calculation to determine that? Right. So we're just going to take the 42,000 divided by the number of pay periods per year, right? So 42 divided by 26. How much? 1538?
Yep.
Per pay. Gross. Right? Right. So can you, if you are given the salary of an individual, can you determine how much they're paid on an hourly basis if you're also given the number of hours that they work? Can you determine how much they're paid on a per pay basis? If you're given that annual salary and you're given enough information, we know that we have to know how frequently they're paid, right? What does it mean that when I say someone is an exempt employee? What does that mean? Exempt. What does that mean? They're exempt. Exempt from what? Means they're
Standard withholding.
sorry?
Standard withholding.
Standard withholding. No, I think you're thinking of contractor versus non, like employee versus contractor. This is an employee. Employees can be either exempt or non-exempt, right? Exempt versus non-exempt. But what does that mean? Exempt from what? Exempt from taxes altogether? I wish. What are they exempt from? This is where you have to remember some of those laws that we talked about early on. What's the big one that pertains to overtime and minimum wage, child labor laws? Remember what that one's called?
FLSA.
FLSA, right. So if they are exempt from a couple of provisions of the FLSA. Remember which provisions those are? So for the FLSA, there are 4 main provisions, right? So there are rules regarding overtime pay, rules regarding minimum wage, rules regarding child labor laws, or child labor restrictions, and then there are some record-keeping requirements. If an employee is exempt, they are exempt from those overtime and minimum wage requirements, right? And the minimum wage, what we're talking about here is an hourly minimum wage. Because remember, there is a minimum wage, but it's a per week minimum wage, and that was $684. So that means that an individual who is exempt from an exempt employee does not have to be paid a premium for hours worked over 40 hours in a week. They can work 60 hours a week, 80 hours a week, and still make the same amount of money, right? Also, there is no hourly minimum wage for an exempt employee. We usually think of exempt as salaried, but that's not necessarily the case. Most times that's the case, but not necessarily exclusively. So, exempt employees do not have to be paid overtime for any hours over 40. And they do not have to be paid a minimum of $7.25 an hour. Do you remember some of the different classifications of exempt employees? Remember, it's pretty specific about what types of employees can be classified as exempt. Of executives, professionals, administrative positions, those creative professionals, IT professionals, those types of classifications. Your textbook goes over those different classifications of employees. Okay. What taxes are covered under the Social Security Act? Remember, the Social Security Act has FICA, Federal Insurance Contributions Act, consists of a couple of different taxes. What are those taxes? What are they called? Yes, OASDI, Old Age Survivors and Disability Insurance, and HI or Medicare. You remember the tax rate for these two? The full tax rate. 12.4 for which one?
OASDI.
Mm-hmm. What's the tax rate for Medicare? Full tax rate. 2.9%. But these are split, half and half. Half, the employee pays half, the employer pays half. Okay. Now, pertaining to OASDI, remember we have a wage base. What does that mean, wage base? When I talk about that OASDI wage base, and you probably remember the number. What's the number for the wage base? 147,000, right. But what does that mean, $147,000? Sorry?
The total amount is taxable?
Right, the total amount of wages that are subject to OASDI tax per year, per individual. So that means any combination of earned income, income that is subject to OASDI, any combination, meaning multiple jobs, W-2 positions, as well as self-employed positions, in total during the year, only 147,000, the first 147,000 is subject to that 12.4%, right? There is no wage base for Medicare. We've got that additional Medicare tax. Remember the additional Medicare tax that we talked about? Anybody remember what that percentage was?
0.5.
Get the point. It's easy to confuse this with the food tax because we're talking about something less than 1%. Point. Louisa has it. 0.9. Right. 0.9% for additional Medicare tax, but we don't start imposing that until we get to what wage? 200,000. Right. So this one again up to 147. Okay. And this is over 200K. Okay. Questions so far? Is this all coming back to you? Ringing a bell? Let's make this pretty. So let's switch gears a little bit and talk about federal income tax withholding. That was chapter 4. Maybe you've blocked it from your mind because I know it's kind of a challenge. But let's review a little bit. Federal income tax withholding. Remember, we've got a couple of different ways. Well, first off, we have 2 different methods with regard to which W-4 form we're using, right? We've got one method for pre-2020, whoops. W-4. This all depends upon which W-4 the employee has filled out. We've got pre-2020 and we've got post-2019 W-4. So December 1st, 2020 would be the post-2019 W-4. Both methods, we have 2 methods of calculating. Do you remember what those 2 methods are? Percentage method, and what was the other one? Wage bracket method, right. So, got the percentage method and wage bracket. For both of these. So the percentage method, that's where we have to do the calculation, right? We use that when wages exceed, when they're off the chart, right? The wage bracket method, we can use that table, right? So we can use the table to determine how much income tax withholding per pay period on the wage bracket method. The percentage method, we use that, and it's a little bit more involved calculation. We use that when the wage is off the charts. Now, do you recall as well, there were 4 main factors, 4 main pieces of information that we need in order, before we can even determine which of these methods we're going to use. What's that? So we've got 2 different regimes here, right? Actually, let's talk about the new one first, because we spent most time on looking at that. So these are our 4, we'll call them factors. 4 pieces of information that we need in order to calculate income tax withholding. What's one of them?
Pay frequency.
Pay frequency, right. Because we need to know whether we're using the percentage method or the wage bracket method, we need to figure out which table we're going to use. So that's why we need to know the pay frequency. What's another one?
Filing status.
Filing status, yes. I'm going to put that one down here, number 3. And I'm actually going to put it in a different color. I'll tell you why in a minute. What else? Checkbox. I'm going to put that one in red as well. What's the last one?
Amount of dependents.
That one is going to be using the old method, and keep that in mind because that'll be my next list of questions. What's the last piece of information that we need in order to calculate?
Is it the same allowances?
Nope, that's going to be over here too. Do we need to know how much they made? We probably need to have some sort of information about what their pay is, right? We need to know their taxable wages. Now, we may have additional information about dependents and that if they filled out sections 3 or 4 in that W-4, but if they haven't, this is what we need. These are the 4 pieces of information that we need. So checkbox, yes or no. Now, I put those in different colors because, remember, the first 2 here are the same in the old method of doing the calculation. We still need to know the pay frequency. And we still need to know the taxable wage for that pay period. Remember, taxable, then that means everything after pre-tax deductions, right? Or we may have some taxable non-cash benefits that we have to add to that. Now, there are 2 other pieces of information though that we need. And you had mentioned
Dependents or allowances.
so allowances, right? So the number of allowances that are being claimed. And we don't have a question about filing status on the in the old method.
Married.
Single or married, right? Marital status, right? So similar to filing status, but not the same. Okay. So remind yourself of these 2 methods, the 2 different ways of calculating. We use those for both, the old method and the new method, and then remind yourself of these 4 factors as well. Be careful on the exam that the question is pertaining to, be clear about whether the question is pertaining to the pre-2020 method or the post-2019 method, okay? Be careful of the years that are indicated. Let's see. There is a question about pre-tax salary reductions, the types of, can I erase this? Are we good? The types of deductions that are pre-tax or that are post-tax. So pre-tax, probably why it's over here. It's an R. And remember that what this means is if it's pre-tax, we're going to subtract that deduction before we calculate the tax. If it's post-tax, we're going to calculate the tax, and then we're going to subtract the deduction. So the pre-tax deductions are tax sheltered. They provide a tax advantage. So if you recall, things like health insurance, retirement plans, retirement contributions. But remember, retirement contributions are pre-tax for income tax purposes, but not for Social Security, OASDI, and Medicare purposes. So can't write only pre-tax for federal income tax and state income tax. So you've got to do, if you've got retirement contributions, you've got to do two different calculations. Right? You've got to do one for federal income tax and state income tax purposes before calculating that, and then you got another calculation that has to be done before calculating Social Security and Medicare tax. Anybody else have any, what else would you add to those lists? Other types of pre-tax deductions? You can look at your book if you want.
Cafeteria plans.
So cafeteria plans, right? Which might include the health insurance. Those are pre-tax.
Those retirement contributions would be, those would be considered like the IRA contributions?
Yes, it's 401k, IRA, yeah, so 403B, 457, simple, IRA, Roth, there's all sorts of different kinds. Right, of course the Roths, actually the Roths are kind of a special category, I probably should put that up there. Those are not pre-tax, but then when you receive the distributions, you're not taxed on the income. So I'm actually going to take that one out, because that one's not pre-tax. Cafeteria plans, how about those flex spending accounts? HSAs, contributions to HSAs. HSAs. There's a long list, right? Post-tax. Things like union dues. They're not tax sheltered, so they would be subtracted after the tax has already been calculated. Charitable contributions. So if you have them directly withheld from paychecks. You know, if it's going into savings bonds, you're having amounts withheld going into savings bonds. That list as well would be quite extensive. So these are amounts that are the employee is paying. These are amounts the employee is contributing or having withheld. So it's coming from their paycheck. Some of them are tax sheltered, some of them are not. So be able to make the distinction between those two. As opposed to, remember those taxable benefits and non-taxable benefits. Those are amounts that the employer is paying for. Sometimes those benefits, the value of those benefits is added to the employee's taxable income. Sometimes it is not. So these are subtractions, the others are essentially additions. Let's see. Remind yourself of the provisions of the FLSA, some of those details of all the laws that of all the non-tax laws that we talked about. The FLSA is the one that you probably want to focus on the most. But you'll want to know what some of the other ones, what they mean. Like if I give you an acronym, can you pick out which one it is in a list of different real or made up legislation? Okay. The distinction between that payroll register and the employee earnings record, what type of information is on both of those types of records, and what we use those records for. Okay, so FUTA tax. At what point does an employer have to make a FUTA tax deposit? At what point during the year? There's a liability threshold. What is that liability threshold? Once they owe how much in FUTA taxes? So once the employer accrues a certain amount of liability for FUTA taxes for the year, that's when they have to start making that deposit. If they never reach that point, they don't have to deposit it until January 31st. You guys remember what that number was? I'm sure some of you do. Nobody remembers? Gosh. It's a good thing you get to use notes. Come on. Anyone? So if my FUTA tax liability is $400 as of October 31st, do I need to make a deposit? No. If my FUTA tax liability is $600, do I need to make a deposit? Yes. So at what point? $500. That's right. Remember, once it reaches $500, that's when that deposit has to be made. Hey, are you guys awake? Okay, so maybe not. Okay, so remember, now we're going to talk about the deposit of FICA taxes. Those are amounts that would be reported on the 941 form. And we've got all those different schedules. We've got the, oops, excuse me. We might have to make a deposit on a monthly basis. We might have to make a deposit on a quarterly basis. We might have to make a deposit on a semi-weekly basis. And remember, that doesn't mean we're making it twice a week. It means it's either going to be made on Wednesday or Friday, depending upon when our payday was. Or we might have to make a deposit the next day. How do we know? What determines the frequency of deposit? Whether the IRS likes us or not, whether our EIN ends in 0 through 5 or 6 through 9. How is that determined?
The actual amount that they have.
Right, so the amount of liability. The higher the amount that's owed, the more frequent those deposits have to be made, and the quicker those deposits have to be made. Remember, they're just like us. The more money that's owed, the faster you want it, right? If you get a paycheck for 10 bucks, chances are you're not going to be rushing to the bank to deposit it. But if you got a paycheck for $10,000, you're going to be getting yourself to the bank to deposit it pretty quick. Same idea. The more that's owed, the faster they want it. All right. Who pays federal unemployment taxes? Employees or employers?
Employers.
Employers, right. Only the employer. For federal unemployment tax, only the employer, always, always, always. For SUTA taxes, state unemployment taxes, there are some instances, some states that impose a SUTA tax on the employees as well. Iowa is not one of those. Most states, it's only the employer that pays the SUTA tax, but always for FUTA tax, it is only imposed on the employer. FUTA tax, FUTA credit. So remember, there are a couple of instances where that FUTA credit may be reduced. So first off, what is the tax rate for FUTA? The full tax rate. The full tax rate with no reductions, no credit. 6, right? 6%. If an employer is eligible to have that tax rate reduced by the full amount, what's the full amount of the credit, the maximum credit that they could get? 5.4%, right? So maximum credit, 5.4%, which means our adjusted FUTA rate is 0.6%, right? 0.6. However, there are times when this maximum credit is reduced. We have a credit reduction, which when we reduce this, this increases, right? So if our credit is if it's been reduced by 3% or 3 points, then our tax rate then is increased to, what is that, 3.6%? Means our taxes go up, right? There are a couple of times when this credit, maximum credit, might be reduced. Do you remember when that happens? What are the factors? Right, so if the employer has been late in paying their SUTA tax, or didn't pay it, or if you're unlucky enough to live in a state that what? I'm sorry? Yeah, exactly. So if the state owes the federal government for FUTA taxes, well, essentially they've borrowed to pay for their SUTA taxes, right? I'll just say state owes the federal government. Okay. All right. A lot of these, by the way, in going through this, when I look at this is just the assessment. We will review. We've got enough time to review for the final as well, because a lot of these are doubled up. Okay, a lot of these topics, same thing that would be covered on the final. Okay, let's talk a little bit about those journal entries. So we have some expense accounts that we use. We have some liability accounts that we use. We have some asset account, one asset account in particular, cash, that we use. There are a couple of expense accounts in particular that we use. What are they? And these would pertain to those first two journal entries that we talked about. Wages expense, right? Wages, salaries, whatever, is one expense account. Now think about the second journal entry. We're going to use another expense account. And that journal entry, records the payroll taxes that are owed by the employer. What's the expense account that we use for that? It's the one that I complained that they don't actually use the word expense in it, even though it's an expense.
Payroll tax.
Payroll taxes, right? Right. These are the two main expense accounts that we use. Remember, we've got some liability accounts that we use too, right? So these are the expenses. You name some of those liability accounts that we use? They have the word payable at the end. So SUTA payable, that would be one. Right, so FICA, OASDI, payable. So if we have FUTA payable, we probably also have, I'm sorry, if we have SUTA payable, we probably also have, I just gave it away, FUTA payable. If we have OASDI payable, we probably also have HI payable, right? Right. So know the distinction between those payable accounts and those expense accounts. And for those of you that are in accounting or have taken accounting, remember those expense accounts, that's going to show up on the income statement. These are going to show up on the balance sheet. Let's see, what form do we use to report our FUTA taxes? We file it annually. $940, that is correct. So, FUTA, Form 940 for federal income taxes and FICA taxes. What's that form? And this one's quarterly.
41.
Yes, 941. Make sure you've got the difference between those two, that you understand those. And again, so this one is filed, and this is the form itself, not the deposits. Deposits are done to have a separate schedule. The form itself, so this is annual, yearly, and this is quarterly. What's the W-2 form? Not the W-4, now we've got a W-2. What's the W-2 form? W-2 form. I'm sure many of you have received a W-2 form. What's the W-2 form? What does it report? Who's had to file taxes before? Raise your hand if you've had to file an income tax form. All right. And if you were an employee, what did they send you? A W-2. Why did they send you a W-2? What good was that when filing your tax return? Carter, what did you use your W-2 for? Sorry?
Wait, what's the question?
The W-2 form.
Yeah.
What is it used for?
Filing income tax.
Okay, but why? What information does it provide? How much you made, right? How much you made. It also provides other types of information. Not only how much you made, but deductions, right? Deductions, what types of deductions?
Medicare, Medicaid.
Right, taxes, exactly. So, when does that have to be filed? By the employer. Not when you receive it and you file your tax return, but when does the employer have to give it to you? Sorry? I can't hear you. Well, it wouldn't, you said October or November? So W-2, if your deadline for filing taxes is April 15th, you're gonna need it before that, right? Yeah. When is the deadline for them to give you, employers to give the W-2? End of January, exactly, January 31st is the deadline that they have to give the employees a copy of that W-2 so that the employee can then go and file their tax return, right? Okay, so here's a math question for you. SECA taxes. Remember what SECA taxes are? Not FICA taxes, SECA taxes. So FICA taxes are shared equally by the employer and the employee. SECA taxes are paid by self-employed individuals. They are both the employer and the employee. So those tax rates are doubled. So let's do a little bit of math here. Let's say we have an individual that has self-employment income of $75,000. What is their SECA tax on that? Remember, SECA would be both FICA, sorry, Social Security, OASDI, sorry, and HI. So we need to know the tax rates under SECA. What's the tax rate for OASDI? 12.4%. And for Medicare tax or HI? 2.9%. So somebody do the calculation for me. For OASDI, you got how much? A little bit louder. 9,300. And for Medicare? 2175. Right. So if I give you an income number, can you calculate what the SECA tax is? Right. All right. That's the review for the assessment.